Aloha and welcome back to the week that was. I'm your host, Colin Edsman, and this week was, just to say the least, something insane. Like, I keep saying that, but the weeks just keep getting more crazy and crazy. The news keeps coming in back and forth, so it keeps going through. If you were here the other day, we talked about the Trump's presidential address, and that didn't go super well for the markets. One of the biggest red and green candles I've seen in a long time, due to the fact that a lot of people were expecting some de-escalation, and honestly, that didn't happen. Uh, it seems like we're going to be there at least a couple more weeks, and that didn't bode well with the markets. Like, immediately, poosh, right out of the sky. We can bring that up in a little bit. But let's get some updates going for the week, or at least for today. So what came in today? So let's check. With a little more time, we can easily open the Strait of Hormuz, take the oil, and make a fortune. It would be a gusher for the world, President Donald Trump. That was 13 hours ago today, and the markets are closed. If you don't know that, congratulations if you didn't know that, but the markets are closed today. One day, with tokenization being more popular and coming forward a little bit faster and faster, we're going to be able to trade 24/7, 365. So for you active traders out there, enjoy this time with days off, with the markets closed, because soon that won't be the case. If you caught the other day, SIBO is introducing prediction markets for themselves. Now, they're not going to be covering pop culture or anything like that, but they're going to be introducing almost like a spread or a maybe. So if you don't already know, prediction markets are binary, a binary contract. It's either yes or no. What SIBO wants to do is introduce a maybe, right? So you would get about 50 cents for a maybe. Their goal being to introduce more new traders to the options market. Now, SIBO is a bank out of Chicago. SIBO stands for Chicago Bureau of Options Exchange, something like that. Check me later on. But they're where options go, and they want to introduce people to one of the most powerful vehicles of the trading game or system or finance, which is options. Now, a lot of people don't trade options because it's risky and dangerous, and it is. So it's good to introduce it in a more palatable way that everybody can pick up and understand a little bit. It's like when futures contracts started introducing mini and micro contracts, where they're just smaller and smaller versions, so people's risk appetites weren't so high. With people who have smaller portfolios, they can come in and try that themselves and see how that vehicle works without having to necessarily paper trade. Now, paper trading is a strong vehicle as well. It saves you a lot of money too. A lot of time it's just better for you to just write it down and then see where it goes from there. Sometimes you're wrong, right, and it goes up, but a lot of times you're right and it comes down. But let's take a look at the S&P 500. So this is the only stock market exposure you can have 24/7, 365 at the moment. And the volume's not bad. I'm using this as a bit of a hedge on my end. So I'm looking at the percentages, and they're dropping, which is good for the overall benefit of my portfolio, right? But if the odds increase, then my portfolio will come down and these will go up, right? So they kind of balance each other out in a way. But because of the closed market, this is the only thing we can check. So I'm checking this just to double see if any news that we're going to go and cover affected this throughout the day. And you can see here that the chances of the 7,200 have gone up a little bit, right? So so we're pushing more towards a bearish direction still. I don't think we found any sort of bottom. Let's take a look at the chart, see which one I've got up over here. Perfect. So this is the way the S&P 500 ended the week. As you can see, this was sort of that kind of bottom that we were sort of expecting, right? It's like, oh no, and then plunge protection kicks in, boosh, and then test that one area again, boosh. Now that was a decent double bottom, right? If you understand a little bit of how charts function, this was a decent indicator you were going to get a rise. But you can see here, this is where Trump started his talk. Now, with the time that he chose to speak, that's sort of what pointed me into thinking it wasn't going to be a good speech. It was right after the markets closed completely, which is 3 o'clock my time, and 9 o'clock for the rest of the country, I guess. And because of that timing, he maybe he thought it was going to help, because usually he would give us bad news when the markets are completely closed, but he gave us bad news with the markets being open one more day. And you can see it started that Friday, or today's Friday, yesterday, Thursday, definitely trended down, and then tried to come up and then trended down, right? It's another kind of double bottom looking thing. And then poof, right back up to its mean. So this gap was completely filled. Now, I'm not quite sure why, but some reason, some way throughout the day, it just popped off. Now, I was intelligent enough to come in and sell my puts here because I've started to watch how these markets function, at least with a lot of it being moved by posts. It's important to double check if any more tweets are coming out, because that's obviously what's affecting the conditions of the overall crisis. The oil prices are still elevated, right? So even though we got a bit of a return here, I don't expect it to be overall changing the trajectory of the market at the moment. Why would it? Everything's escalating. We're going to be in Iran another couple weeks, right? So there's almost nothing that can change that over the weekend. And I don't expect that to change until everybody calms the heck down. And because we're getting contradictory information from both sides, it's really hard to tell if anybody's going to calm down anytime soon. Now, this is the oil. Crude oil finished the week at, oh my goodness, it finished the week at $112 a barrel on the futures. It got as high as 113. In other places, they calculate it differently, and I'm seeing it as high as 115 as a spike goes. But we're still within our initial scare, push, right? And then it retraced. And now we're still trading within this kind of green to pink line, right? Left, now we're up here. Now I expect, because you can kind of look at the overall average of this chart and see that it's sort of somewhere at the $100 range. And until we see some at least stabilization of the oil to that range, we're going to continue to see high volatilities in the stock market. They're almost contradicting each other, right? Oil goes up, stock market comes down. Stock market goes up, oil comes down. And we'd like it to come back down to that kind of $77 range. That's where the economy was booming a little bit more. The stock market was doing better. That's where the S&P 500 was still at that kind of 6,900, 7,000 range. And until we see some actual de-escalation, like I wanna guesstimate that it would be boats moving, or not boats moving, but the U.S. actively leaving Iran. Whether talks go through or not, it seems like everybody's lying to you anyway, so it really doesn't matter as far as talks go. But once we see some action, right, another place to check is the tanker tracker. They've been getting a lot of traffic on their X lately, but tanker tracker tracks traffic of tankers moving through the Strait of Hormuz. And because that's one of the more important indicators of whether gas prices, oil prices will come down, is how much traffic is moving through there. I'm not quite sure if I covered the other day, but I'm going to cover it one more time. Iran is considering charging a toll per barrel, starting at $1 per crude oil barrel, depending on what country you're from, to move oil through the strait. The Philippines, Asia, a lot of Asia, China, like I said, the Philippines, Korea, Japan, they're all dealing with energy crisis because of where their oil comes from. I also read something earlier this week that we're allowing Russia to start importing or exporting oil to these countries to compensate for the overall price and what the price of crude oil is doing to the world itself. So we put sanctions on Russia to kind of get them to stop doing certain things. They're still actively fighting Ukraine, I think. We don't cover that as much anymore, so I'm not 100% sure what's going on there. But because of those attacks on them, we put sanctions on them exporting oil, and right, you hit them in the wallet, right? It works on a small scale. It works on a large scale too. If you hit someone in the wallet, they tend to listen a little bit better and redirect themselves a lot faster. But because of the overall crisis, they're allowing Russia to move oil out, which tells me that it's going to be at least another couple weeks for sure. Whether the timeline Trump gave us the other day is accurate to him, it's going to be at least that long, because if it wasn't, why would they allow Russia to start moving oil. But we need it for them, for Asia, and they need energy, right? It's important. Their economies are taking a hit as well. I'm seeing oil price or gas prices over $100 a gallon in some of these countries like the Philippines or Australia. Now their dollars are calculated differently. I'm not going to give you the comparison to the US dollar because I don't want to. But the overall important part is how it's affecting the global market. Now, locally, these gas prices are affecting the electrical costs soon. I read I think it was yesterday, that we're going to expect 20 to 30% increase in our gas prices, not gas prices, our electrical costs because of how Hawaii makes electricity. Predominantly, it's still diesel generators, and diesel is still oil based. And because of the increase to us, the increase the import costs for oil is going to increase the electricity costs. So that's great for a lot of people who have solar. Lots of people here on the island have solar because there's so much sun on this side. I don't have solar yet, but I don't use much electricity. It's probably going to be negligible. So if we see a 20% increase, it's not something that I haven't already considered hedging in other ways, whether it's through prediction markets like Kalshi or prediction markets on Robinhood, or even just putting a little bit of your cash into an oil exposed stock or an energy stock, right? That's going up, right? Whether it's something like VG, Next Decade. You can also go with an ETF like Crack, which is by Van Eck. If you don't know about Van Eck, stay tuned for the next few episodes. We're going to cover ETFs, and that's going to be a predominantly Van Eck episode. To keep it short, they've been around 70 years. They came up with some of the first ETFs to ever exist, and those two simple benchmarks for me is enough to at least trust them. And then you can go and back test the ETFs that they run. They grow steadily. They're always ahead of the curve as far as what to expose you to. The next big thing I'm seeing from the Van Eck direction is India. So I didn't know this until I saw that, but India's economy is pretty comparable to the U.S. economy. Not in any kind of deficit way either. It's like almost one-to-one their amount of growth, the amount of cost to growth that they have. So it looks like money's going to start moving towards India. So I'm going to keep an eye on that, and if and when Van Eck comes out with a ETF for it, I'm probably going to start allocating in that direction. Other things that I hold would include Robinhood Ventures One fund. So that fund has three of some of the top 10 most anticipated IPOs of this year, that being Databricks, Stripe, and Revolt. I covered that a couple of weeks back. Go and check out some of that content for a deep dive into Robinhood Ventures Fund 1. It's currently trading above its NAV, which I'm very excited for. Let's see if I can find it. I think I have it up here. One more. I hope you guys are having a great day today. Happy Good Friday to you. If you don't know what Good Friday is, it's the day that Jesus was crucified. And then we have the weekend of mourning, then celebration because of his resurrection this coming Sunday, which is Easter. Now, on the subject of Easter, we're most likely going to go live to talk about the week to be, or the week to come. I'm going to have to figure out if it's going to stay if it's going to change to the week to be, because I seem to keep using that one. But the week to come, coming this Sunday, we're going to be talking about what we're expecting in the upcoming week. Now you can see some of my allocations up here. They're in percentages. As you can see, I'm down on Robinhood, but if you've been buying Robinhood, you're most likely down on Robinhood because I was bullish like everybody else, and came October, around October 9th, things started turning around real hard for a lot of people, and that was sort of the top. And also the with the whole Jane Street debacle and the Bitcoin dumping, it took a really huge, it took a huge dump for us as cryptocurrency blockchain investors. But that's okay. We know this already. Like people who invest in blockchain tech know that it's a volatile market and that we will constantly buy the dip, right? People are stacking their BMNR right now. People are stacking their Solana right now. Solana's was under $90. It was upwards of $300 like less than 6 months ago, right? So if you're smart and you are, well, liquid and you're sitting in cash still, um, you're gonna start deploying it a little bit at a time, a little bit at a time. Because my what I'm noticing is the market itself hasn't continued to push Bitcoin down. It came down, of course, throughout the last few months and the last quarter of last year, but the overall economic crisis has gotten worse. But Bitcoin and a lot of the cryptocurrencies have kind of just stayed in that one spot, which is good for us as holders because we're now like, okay, cool. This looks like a strong bottom area. Let's see what else we got here. Let me see. I gotta have it up here somewhere. Boop, 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 boom. I'm just going to transition you back to me for a second while we take a look for it. Um, but Robinhood Ventures Fund 1 is still the one of the best vehicles for a everyday investor to start allocating towards non-public companies. That wasn't possible before. I know a lot of new things come out all the time, and if you're a new investor, you think these things have been around a long time. But private companies are private for a reason, and because they're volatile by nature, they didn't want everyday investors to invest in private companies. But we know that private companies going to IPO is where a lot of people make a lot of money for themselves. Like if you got Apple before IPO, it was maybe like 10 cents a share. Imagine having Apple for 10 cents a share. Now it's somewhere trading about $200 a share or more. So Robinhood Ventures Fund, I'm going to keep buying a little bit at a time, a little bit at a time. Now, I want to keep deploying more at the moment because of how volatile the nature of a private closed-end fund is. And also, we haven't had enough time to track its price action yet. I don't know what it has beta to. I don't know what affects its movement, because these companies aren't really affected by they are and aren't, right? They are affected by the overall uh, global oil crisis, but they're not necessarily affected by the public markets like we are. The public markets are affected because everybody can touch it, right? It's like, okay, I'm losing money on this, so I can go take money out of that stock directly, and then that company takes a small hit. But if it's in the private sector, it's still sort of shielded, right? So I can't tell you what's going to move it per se. But I'm excited to see what it'll do, because it's going to be good for everybody who's invested. And these companies are great. Like Databricks, for instance, is an incredible company, and they're going to start moving more and more data and keeping that data stored for us as users. We keep forgetting that storage is important for anything we use, whether it's AI, whether it's a server where you have to. Okay, so when you go onto, let's say, Amazon, for instance, you're not thinking that when you go and search for a product on Amazon that it has to go and move what you're looking for into a server and then find it somewhere. So we need more and more of these things to provide more space for us to grow our technology. And on top of that technology, we need more electricity to power it. So electricity and power is, or energy, for instance, is not a super glamorous thing to invest in. But if you're investing in energy right now, you're investing in technology. You're investing in AI growth. Whether you like it or don't like it, that's what you're exposed to because of the nature of our current society. It's based in a lot of electricity and a lot of robotics. Oh, on robotics, Nike the other day took a pretty large hit. I'm not too sure if you guys caught that, but Nike, after earnings, dropped down another maybe 10-15%, and that was just straight up disgusting. Like, and I feel really bad because Nike's a strong company. If you were to invest or had invested $10,000 in Nike 10 years ago, at market close this past Friday, you'd have somewhere about $10,020. Like, it went nowhere. Like, it's basically traded sideways from about 10 years ago, and that's pretty sad for a legacy company like Nike. Now, I didn't always approve of their practices, and if they're still doing shady practices, I don't approve of them now. Personally, I don't invest in Nike, nor do I wear the shoes. I find them overpriced and a little bit odd. But you're allowed to collect whatever you want. I collect a lot of things, but for me, I like to wear my shoes and not necessarily box and collect them. But that's just me. Let's see what else we got here. I know there was some news that came in, so I'm going to double check some of that. Boop, boop, boom, boop, boom, boom. All right. Let's check with TKL. I'm going to transition you over real fast. Here we go. Now, if you don't follow them, I encourage you to do so. They have a Facebook as well as a Twitter. And this is a lot of times where I get my most up-to-date information that's the most accurate as far as I can find. This was from 11 minutes ago. Inflation pressures are surging as in the U.S. manufacturing. The ISM manufacturing PMI rose 0.3 points in March to 52.7, the highest since August of 2022. So you don't have to go into this or that of what this is necessarily, but you're seeing that things are rising towards some of the most volatile prices that we've had in the last decade. 2022 was not a great year for a lot of people. Personally, I wasn't invested in the stock market at that point. From 2019 to sort of when my son was born, there was just too many other personal things going on for me to even consider this type of high level thinking. But over time, things got a little bit easier. My brain can open up to more complex thought, like stuff like this. And I can understand that for a lot of people like you who don't have the time to sit down and research these type of things. So I'm going to try to bring as much of the most important information to you as often as I can. At least twice a week, you'll be able to at least join me live, or you can check in afterwards when you finish work. A lot of people are off right now, so maybe you have time to jump in live. But if you're catching this later on, thank you for jumping in at all, and I really appreciate you joining me. Here we go. All right, let's see what we got here. South Korea's economy is seeing unprecedented growth. That's good. South Korea has been trading like a meme coin lately, if you've been following that. South Korea's exports surged, 41.9% year over year in March, the second highest in at least 2 years. That's good. We want Korea to do well. All right, let's check back, see stuff a little bit more. Okay, here we go. What do we got about Trump? Now, earlier today, what I saw was keep the oil. Okay. We can't do that. I know we want to think we could. That would be kind of an interesting thought. But we can't just keep something that's not ours, and it's too far away for us to, let's say, even annex that country. Like imagine all of a sudden we turned Iran into a territory or something, or started taking their actual landmass. Now that would turn this war into something much longer and much more dangerous, and we would see an overall bear market for a long time. Now, like I talked about the other day, this is a midterm year, so don't expect this year to be strong on the S&P 500. Average of 15% drawdown from peak to trough in that year, but the following year has an average of 30% or more from that trough to the next peak. But you kind of have to be invested in that trough, right? So, but knowing that next year will be great, this is the type of thing that we do, right? We're like, okay, we're not as good as Stock Talk. I don't know if you guys follow him. Stock Talk is a beast. Dude knows how to turn this market into, I think he's up 50% on the year so far. But the man is a master stock picker. He's up hundreds of percent per year. But he's sitting on his hands right now, and um, a lot of people sort of have, including myself. I'm not trading as often. Now, this week wasn't a super good week. This is definitely not the best week I've ever had. But did I take a small loss? Maybe a little bit. But am I up? I'm up for the month, and that's not easy to say for people who were just being held up by the bull market last year, thinking that they were good. Now, with the amount of loss I took from, let's say, October, I started to learn. Like as losses are coming in, I started taking profits off of stuff that was green. Right? Like I'm not greedy. I don't hold that thing to zero. I'm creating income, right? And with that comes sacrifice. So I might be down on the overall port size, but I'm still up on profits. I'm still paying my bills. I'm still being able to hedge against what's going on war-wise. That's why I can sit here and be a little bit more calm and level-headed about the entire situation, because I'm naturally pretty level-headed. I don't necessarily stand on one particular opinion for forever, right? I'm willing to change my thought process if new information comes in that contradicts something that I was already thinking. That's how you adapt. Staying in a position too long because you hope something will change without any at least small indication that you could be right is just gambling. I'm seeing a lot of people still have questions about prediction markets and that it's gambling. There's no difference in that level of high level investing than 0 day of expiration, zero day till expiration options. They Because you don't have the time to change your trajectory, and time itself, or theta on the Greeks, will eat your potential profits, especially if it's a short position like 1 day. So you have to be right, or well researched right. So you have to be careful that it's not gambling. But it's interesting to see that we're seeing U.S. senators and even some lawmakers here in Hawaii trying to push back against prediction markets, which is surprisingly ironic. So when you get, let's say, your paycheck and you save, and then you go to Vegas, you're doing roughly the same thing, right? You're gambling the same way. But Vegas is actually gambling. Prediction markets there's no house involved. Inside trading is against the law. It's federally regulated, right? These are things that banks use as data sets. These are things that hedge funds use to protect their losses, right? These prediction market vehicles like Kalshi they aren't gambling unless you're trying to gamble. For instance, let's see here. I'll show you what a gamble looks like on a prediction market. We're already here, but let's find something a little bit more gambly. Here we go. Perfect. So this one's going on right now. Texas Open winner. Right now, there's a gentleman named Robert. He's priced in to win at 56%. And then the next one is Ludwig. Now, Ludwig is not bad. I'm a pretty avid golfer, so I know a little bit about golf myself, but I'm not going to bore you with the details. This right here is a gamble, right? If you were to, let's say, buy the yes on this, that is a high gamble because that means you have only a 14% chance that Ludwig wins. That's not a 0% chance. But here's something for comparison. Aliens being confirmed this year has a higher chance than Ludwig winning, right? I think that percentage is like 18%. Somewhere between 12 and 8%, 18%. It fluctuates. So you would have a better chance of making profit on aliens than Ludwig. And because aliens has a longer period of time, you have a better chance, even if the percentages were exactly the same. Like this Texas Open finishes probably Sunday. Golf goes usually, tournaments go from Thursday to Sunday. Could be sooner, but I doubt it. So right now, that guy's in the lead, but Ludwig's got 3 more days to possibly turn it around. So if you're thinking about it from an investment standpoint, you can allocate a small position towards Ludwig, and if he starts to do a little bit better, closing that gap between 10 and negative 10 and negative 14, you're going to see his percentage of growth getting better. But it'll still be a low chance of complete yes. So you might be able to let's say shave the difference. But if you're going to scalp prediction markets, like that's how traders do it. You can scalp. We scalp the S&P 500 over minutes sometimes, right? Sometimes you just take lunch money out there. $30 I made the other day on the S&P in about 7 or 8 minutes, right? And people are working for what, $20 an hour, right? Take the money off the table. But with Ludwig, let's say I bought the 14 yes, and he started doing better, and he got down to, let's say, negative 10, or from negative 10 to negative 12, and Robert stayed at negative 14, you'd probably see an increase to maybe 20% chance of winning. Not 100% because both of them have a lot of golf left to play this week. So you could swing trade this, but as you can see, it took me about 5 minutes to explain how that functions to you. And if you don't understand what I just said, don't be buying lotto tickets. You'd have a better chance of buying Ludwig's no, which is probably priced in at about 80, let's check. I say 80 cents, which gives you an 80% chance of profit, which is pretty high, right? So here you go. So the no would be actually better because you're looking for high volume amount of trades and often, because that's how we do it as traders. We don't stay there very long. We're not sitting on hope. We see profit, we take it, because we're not trying to double these positions, right? I want high chance of profit. Personally, even this 56% right here, for me, feels like a gamble. That's a coin toss. I don't do coin tosses. I'm looking at 75% or higher. And even that, unless I truly understand the market, I don't even buy the 75% chance. Like the things that I tend to pick up on are things that will grow against the things that I already own. So today's Friday. This weekend's going to be busy. Salon tomorrow. And then we got a Easter party in the neighborhood coming Sunday. So the week to come will be later on later on in the day on Sunday. But I was out there doing the grass, doing some yard work, getting some things done today. And I'm hoping that because of those, I just don't have the time in the next couple of days. So it's been nice to just get out there, touch grass today. My lawn looks really nice. The rain has really brought the grass back from the dry season. And maybe we'll throw some eggs out there for my son to Easter egg hunt in our little yard first, and then we'll go and take him to the party to see how he does it there. I'm not quite sure how he's going to do with the overall Easter egg hunting because he's 21 months old yesterday. So happy 21-month-old birthday to him. Oh, excuse me, we got a little bit of a jump on that one there, maybe a surge. Happy 21-month or 22-month birthday to him. And so he's been playing with these golf balls. these plastic ones, and he'll let them roll, go get them, bring them back. So I'm hoping that that practice is going to help him with his Easter egg hunting. But we'll see. He's a funny kid, so I'm interested to see how, if he's gonna just keep hoarding them, or he's gonna be willing to let me put it in his basket. These are the things that we work hard during the week for. These are the days that I look forward to, because it's my Ohana days. It's the reason I think all week. It's the reason I research. It's the reason I trade. And so that those days have almost no stress. I can just sit there and watch my family enjoy a party, watch my son try to collect eggs with his little tiny hands. So those are the reasons that I pick high percentage chance of profits, right? Like I said, the areas that I buy are hedges, right? It's under financials, right? So you can do crude. These are short. Like, I don't necessarily trade these short ones, but this is the stuff that I'm looking for because of my exposure to the S&P 500. This is the smallest and easiest way for you to also expose yourself to the S&P 500's movement. And that S&P 500 moves everything that you own. A lot of the times, everything that you buy has some sort of exposure to the S&P 500 because it moves the global markets. As you can tell, we started a conflict, and that conflict is now adding stress to the entire globe. Energy crises flowing, coming in every day. People having to make just negotiations they wouldn't have had before because of the stress of their people. I feel the most heartache towards the Philippines as a Filipino descendant boy. I mean, I have a lot of ethnic backgrounds, a bit of a mixed plate, if you know what that means. But there's a strong allocation of my bloodline to the Philippines, and I feel for them. If you don't know, their president is a legacy president. His parents were Imelda Marcos, and honestly, I don't know the dad's name. I'm just going to go with the Marcos. And they were wealthy people. They still hold the Guinness Book of World Records record for defrauding their country out of the most amount of money. They even flew to Hawaii with, like, who knows how many millions in gold bar. Another one, Imelda Marcos was recently seen in a video of some sort, and in the background was a missing Van Gogh, like just a completely missing painting by Vincent van Gogh. I'm 90% sure on that one, but it was definitely a missing painting from a famous painter, and that's insane. But back to the case at hand, these markets that we invest in here, the S&P 500, affect the globe entirely, affect your wallet. So if you can buy a binary contract, yes or no, with a high chance of profit, or at least something that you own against it has profit, then you're in good shape. Gas prices go up, maybe allocate towards there, because at least they grow together, right? Your gas goes up, this position that you took also goes up. Now these right here down at the bottom are lotto tickets. I would say this is more of a maybe. But being said, like, I'm in this position for the entire year. Once it closes, then I'll reallocate that money somewhere else. So personally, like, you can't see it here because I'm not logged in. I'm not going to show you how much I'm allocated in here. But I am allocated in the 6,300, the 6,200, and I have a small allocation at the 5,900 because of the high chances of hitting those lines this year, right? Like I said earlier in the pod, we have midterm year, we have an oil crisis, and de-escalation hasn't really changed. So we could hit this 630 within the next week, because it tested it the other day at 631. I thought I was going to close that contract like sometime this past week, and then we got one of those plunge protections. It's so insane that just anybody can can post something and the entire market moves with it. It blows my mind because it didn't do that as much last year until we got into some sort of crisis of some sort. But it's not going to work the same as the tariff crisis or the tariff talks and the cut of those tariff talks. That being said, we still haven't solidified those tariffs. Now it's in court. A lot of pushback is happening. We're getting companies like FedEx and Costco suing the administration for the cost of those even potential tariffs that they might have had to pay. So it's interesting for me as a market watcher and observer to see how things move. Like FedEx and UPS are good indicators of how the overall country is doing too. If they're doing well, that means a lot of packages are being moved. That means people can buy stuff, which means that people have more liquid income, more money to play with, which means more goods get delivered. So I'm not surprised that FedEx and Costco are a little bit upset that these tariffs might be being rolled back. But we don't 100% know that yet, so don't necessarily hold your breath about it. But back to prediction markets. So it's important for you as a watcher of prediction markets, or even as an investor in prediction markets, that you stick to what you know. I've gotten caught up in stuff and buying stuff that I don't know. Like a good example was I was predicting basketball games because it looked exciting, right? You get lured in there. You got a little bit of BS money here on the side. You might as well try. So I told my wife about it, and she was very right when she said this. I don't know jack shit about basketball. I honestly don't. I'm not a big sports person. I'm not a person who's very good at working on a team. It's a flaw and a plus. I'm a decent team player, but I don't go look for how to be on teams. I'm not a collective thought kind of person, for good and for bad. Congratulations if you are. I'm a lot of times jealous of people who have all these abilities to be on teams: softball, baseball, volleyball, football. Just it's not my dynamic. I prefer to utilize people as information hubs and create relationships through the information. But with prediction markets, like I said, you gotta trade what you know. If you don't know something, like I'm not gonna go out there and be like, oh, okay, cool. What's the highest temperature in Boston today? Let's go and try to guess what Boston's temperature. I've never seen that city. How would I know what Boston's temperature is? Or New York's temperature, or Miami. Hawaii should have this too. I'm hoping that prediction markets start getting a little bit fatter in our Hawaii area, because it's thin. It's so thin. I want to trade what I know, but I can't trade my own state because. Okay, so I have an allocation towards the governor being Democrat. Like that's basically all I can do. Now it's got when I started that position, it was like 94% chance, and that's 6%. Like as a trader, sometimes we get all like, oh, 6%. 6% is almost twice the yield annually on a bank account, and that position that I put in for at least the governor of Hawaii being a Democrat will close by the end of the year. So I'll get that yield way before the end of the year. Now, is there a chance that the governor might be Republican? Yes. It's like 7%. Would I want that? Yes. Because we need a little bit more competition in the political realm. Like you hear when Republicans say we need a better leadership, you hear Democrats just laugh at them. And that in itself is a strong sign that we are far to one side and not everybody's being represented. But it doesn't really matter for me. I'm always looking for what's the best for Hawaii. And Hawaii would do better if the people in charge weren't always so fat and comfortable. Like you need them a little bit on the edge of their seat at times, like they could lose their job or that somebody could take their job and be better at it, right? That gives you a competitive edge. They need that. We need that because they're doing just things that I don't necessarily agree with from a financial standpoint, because I look at governments run as a business in a way, right? It needs to make profit. Now, Hawaii makes, I would say, over 90 billion, under 110 billion GDP annually. The recent floods and the damage that we got with that is costing an estimate of, let's say, $1 billion. We haven't finished with Lahaina's damage yet. We haven't even considered all of the damage or the redesigning of certain infrastructure. So Maui is a good example I'm going to use. So South Kihei Road, if you're familiar with it, is right along the ocean. Like it's a stone's throw from your car door to the ocean as you're driving. But because of that stone's throw, a lot of the sand is under the road. So when the water comes in, starts pulling the sand out, the road falls under. Now, right against that road, you have condos. We have to move that road. Like, I know it's not something that's popular. I know people aren't going to like it, but I think it would be better if we were to start moving that road, or at least turning because there's a lot of roads from the top side, North Kihei Road, that you can take down towards the South Kihei Road area. So it wouldn't be a completely wild idea if you started to turn portions of that road and just cut it off already, because the ocean is coming for it. And just in the interim, until the ocean starts moving up and up and up, we use it as parking lots. We use it as food truck areas or something like that, because we can still give people lots of beach access. We don't want to take beach access away from people. I wouldn't want that. But it seems naive to think that the ocean's not coming up and up and up and up and up every year, and that the storms that we deal with cause more issues. It's all about long term. We want our state to be strong long term. We want it to be here. I'm going to bring you out of this real fast. We want our state to be strong long term, and we have to use examples from other islands, either up our Hawaiian chain, up the hundreds of other islands that are up north of Ni'ihau. We also have to look to the South Pacific, some of the atolls, and see how the ocean itself turned those islands into atolls, right? We can't just hope. I want to imagine that Hawaii will stay the way it is and the coastlines will never change. But that's illogical and improbable. So we have to consider turning our income towards revamping, towards moving roads, towards restructuring the overall way we think about a civilized society, a highly populated civilized society in the most isolated place on the planet. When you look at where Hawaii is, you see that we're in the middle of the ocean. There's nothing around for thousands of miles. So it's important that we learn how to self-sustain, right? It's important that because there's no one else to really help immediately, that we need to consider protecting ourselves. I like to control the things I can control. So what I can control is the way my money flows. And if I see things coming, I allocate towards that. And that grows over time, because it all grows over time. Now, I watch our local economy because it's important to me, and it affects how I think about my day-to-day goods, day-to-day shopping, what restaurants will be open, what won't be closing. A good indicator, at least for our small town here in Waimea, is we have DoorDash and Uber now, and our Uber Eats, which is pretty good. Now that's a low skill job, right? Anybody with a driver's license can now get into the job market. The jobs are not. There aren't a whole lot of jobs out there for people. The job market is not great. If I can quickly find something about that, I'll talk about it too, just to get some specifics. But the job market itself is like an overall low. Here we go. I will bring it up. Nah, here we go. I'll bring it up for you. So this is as of 12 hours ago. The U.S. job growth in February has been revised down from initially reported minus 92,000 jobs to a total loss of 133,000 jobs. This marks the biggest monthly U.S. jobs loss since December of 2020. And if you were around during 2020, which if you're sitting here watching me right now, you were around during 2020, you know that nobody was working that year. Even if I'm thinking back to 2020, I wasn't anywhere near thinking about necessarily investing. Sure, there were some meme coins that you just throw a couple bucks at, and all of a sudden, hey, you look a couple years later and they're okay. But I wasn't doing any of this type of thing. But December 2020, if I can think back to what was going on and what would have turned that current market into a high job loss month, I would say okay, so thinking about it, that was Christmas time, and a year where people couldn't go and shop. Everything was closed, restaurants were closed, people were wearing, yeah, that makes sense. But the whole world was closed during that job loss time. Like no one could do anything. I was still doing a lot of people's hair at that point in a safe way as safe of a way as I could consider. Like I still had to make an income, but also I couldn't go and put myself in an environment where I got sick, brought that sickness home, and affected the people around me. So I would go to people's houses, just sort of act like I'm a yard guy or something like that, and I would do their hair on the back lanai. Because I didn't want to get people in trouble with their neighbors because getting your hair done was illegal. Even blowing people's hair out was illegal because the particles could affect other people's respiratory systems because COVID could transfer. I don't know. I'm not a scientist. I got a 2-for-1 COVID shot, and that was enough for me. I'm young. My immune system's strong. For the people who don't have that, it's important that they got more at that point. But back to the case at hand, the overall job loss for this particular month being so high is most likely due to the introduction of artificial intelligence and AI agents. Now, if you don't know what an AI agent is, it's basically a body double of yourself. So if you already use AI, and I encourage you to do so, it's way more of an intuitive search engine than any search engine that you could use. And it also is much smarter. But an AI agent basically is like an AI that you can program to do human-like functions. It can go in from one program to another program to another program and then make things for you, whether it's an email or responding back to those emails, whether it's trading. I seen a post a few weeks back where they had 2 different AI agents using trading on prediction markets and how much they made in X amount of time. So also Public, which is another trading platform. It's not public, but it's called Public. They introduced AI agents as well this week to trade probably for you for a fee. Now, so those agents are one, awake 24/7, 365. They can trade any market at any time, and they can trade it so quickly that it would take you longer to transition to one position to the other than it would be for that AI agent to trade maybe 5 to 10 positions in and out. Right? You can ask it to do probably almost anything. Something like, okay, short every double top for a penny that you find for the next 12 hours, right? And take 20% every time it hits 20%, right? I mean, who knows what you could do with something as widespread of a net as that you can just prompt, which is pretty incredible. I haven't heard a single thing, as far as I can remember, that Robinhood would be introducing this anytime soon. Now, our AI is Cortex. Currently, we use it for digests, which gives you a snapshot of what's going on with certain companies during the day in the app, and it's updated minute by minute. They're introducing more things with Cortex, things you can do. I don't have full access to Cortex yet, but you can have it give you a projection of where your position is going to go, ask what you could and could not do. I'm hoping we see agents soon. I wouldn't mind testing it. Give it $1,000 and see what happens, right? If you have it, that's a gamble, right? You're letting a robot do play with your money. But I would prefer free education, high level education, investing education, because rather than having AI agents run your traders' brokerages or traders' accounts, I'd rather teach the trader how to be exceptional at it and reward the education somehow. Because if you have 25 million plus traders and they're all educated to do well, everybody makes money. Your brokerage makes money, we make money, and you don't have to spend money on agentic technology or agents. Agentic is something you're going to hear a lot of coming up soon. The local news will not cover this kind of stuff, so I'm happy to be here and cover the advanced tech that's coming forward in AI. If you are shading AI right now, it's probably because you think it's going to take your job, and it might. But what are you going to do? Sit there and wait for it? Like, it's your job to go and learn that too. Like, you should. It's there. It's free a lot of the time. Why not? If you have students who are learning in schools, sorry to break this to you, the teachers are using AI to either grade, using AI to help build lesson plans that are way more functionable than the current ones. And they're also using it to save time for themselves at home. Right? AI is a strong tool for information. And if you know how to ask a good question, you're going to get great results out of it. But it does have a bit of a confirmation bias to it. Right? So you have to be aware of that because it wants to keep you on the app, because that's how anybody makes money, is staying on the platform. It will try to continue on the conversation, even if it's slightly wrong. So it's important to double check what the results are, right? Back test it. I've made my mistakes. AI has taken me down some wildly wrong rabbit holes. But I've been using AI for as long as I've been trading. So I've watched it grow. If you were in the AI sector even a year and a half ago, you saw Will Smith's spaghetti eating monster, right? Now it actually looks like he's eating spaghetti. It's pretty incredible what AI has done in a short amount of time. So exponentially, we're going to get more and more results out of it. But like I said earlier in the pod, it's going to need energy to run all this stuff. So it's important that you think about allocating at least, who knows, small amounts towards energy, because if it goes up, like your energy costs go up, it goes up. It seems like a decent win. Now, I'm just some dude on the internet, right? I'm not a financial advisor. I'm not here to give you advice. I'm here to educate you on what's possible, right? The future exists, and it comes to fruition 1 second per second, forever, as long as time keeps moving. It's your job to try to see what's coming, right? You don't have to try to take a guess. You know what was before, and things haven't changed in the interim. You're more likely going to get a similar result on the back end, right? Coming into the future. So might as well think forward. Everybody has a couple of bucks. I started with a couple $100 and some change. Just went to Coinstar one day. I got a hair up my ass about trading, and I'm like, you know what, screw it. Let's try. What am I going to lose? All the change that was sitting there in my house? Congratulations. That was doing absolutely nothing anyway but depreciating, right? So if you can turn a depreciating asset into an appreciating asset, you're in good condition. But once an asset starts to become a liability, then you need to start cutting your profits there or taking that loss on the chin. Everybody wants to make money all the time. And if trading on the stock market was easy, everybody would be billionaires, right? Even all the traders I know, right? They're not billionaires. You got a couple of multimillionaires. You got comfortable people like me, and then you got young kids who are just like trying to hustle, right? Turning nothing into something. Right? That's what the stock market is for. It's not for opinions, it's not for your political nonsense sometimes. It's for your ability to grow your income into something that you would never have dreamed of. And if you have the time, then it will only continue to grow forever, right? Especially if you put it in, let's say, a trust after after you're gone. Like, I'm a legacy guy. Like, I'm always trying to think about what's good for my son, what's good for his son, and what's good for his son. I want them to afford to live here at home in Hawaii, where their ancestors are from, for the rest of time. But living in Hawaii is an expensive endeavor. And if you are already doing it, you know that. You know the conditions we have to be in to try to make even a little bit go a long way. Community goes a long way, because we know that government support doesn't always come. So for me, I'm always just trying to think down the road for my son, down the road for his sons or daughters. And if you see this one day, Franklin, marry a person, right? I don't want to be at some robot wedding one day where you married some robot. I don't know. I'm going to sound like some old grumpy old man at one point. No, marry people. Why are you marrying a robot? Don't marry a robot. This seems ridiculous. I don't know if you guys heard the story years ago. Someone in Japan married a Game Boy. No joke. Legally married their Nintendo Game Boy. That was around the time we lost that airplane, the Malaysian airplane. That was somewhere around that point in history. Remember that? Still haven't found it yet either. All right. So as we bring this pod to a close, I want to tell you something a little bit related to Good Friday. So I was recently reading something about Good Friday and its origins, and that's great. It's easy to find that sort of information. But what I know about good and the origins of the word good is it started off with the term God be with you, right? Because you would naturally say it after the Enlightenment. Even before that, maybe a lot of Catholics were saying that too. But Catholicism pre-1500s, pre-1600s was very much you go to a church and you pray in a church. After that, the original texts of the Christian Bible were translated out of Hebrew. And then now at that point you had a God that could go with you. I was baptized Catholic as a young boy, raised by Christian and Catholic families on both sides. My mom came from a Catholic family. My father came from a Christian family. So I grew up into someone who is godly, but not necessarily a God worshiper. But back to the term God be with you. So people would say God be with you because now you had a Bible that could go in your pocket and you could take God with you. You could take Jesus's teachings with you. So people would say God be with you, God be with you. And then over time, because of how often people would say it and how common that colloquialism became, people would say God be, God be, God be. And if you can see where this is going, eventually it turned into good bye, right? So I like to think that Good Friday is actually God Friday, and I like that better. And if anybody's ever saying goodbye to you, now you know, they're really saying God be with you. And even if you think about the way things are translated, you think about how accents function, right? I'm decent with accents. I know you've never seen me do one, but let's say you go with "God be with you," right? Now you go with "goodbye," right? And you say "goodbye." Who knows, right? All of a sudden you're saying goodbye or hearing something that is actually God be with you. Even Yankee, for instance, you know, the New York Yankees, that was from a term of the British would call Americans John Cheese. But because of the way their accents were, it came out as Yankee, right? Hence, Yankees. So there's your little bit of knowledge for the week. Yeah, go tell your friends at at your Easter party this coming Sunday where the term goodbye came from. They'll get a kick out of it. But as we bring this pod to a close, I want to say, as always, farewell, ahui ho, be safe, and I'll see you on the porch.